Bitcoin is supreme and the crypto is in the green. Welcome to today's episode. We're actually going to be talking about a Bitcoin indicator showing the BTC price poised to shatter $700,000. We'll be sharing the digital asset research. This story is going to blow your mind. Also in today's show, we'll be talking about how the Bitcoin dominance is really above 90% and what's reported on CoinMarketCap of the Bitcoin market cap being 70%. That is not accurate. So if you find this interesting, you're going to love today's video. Here at Crypto News Alerts, I drop a new episode every day, so be sure to click the subscribe button as well as the bell icon to receive notifications of the latest crypto news. All right, so let's talk about this Bitcoin price poised to hit $700,000 as Bitcoin continues to slide down $1,000 since Monday and dropping just below $10,000. Digital Asset Research, an institutional grade crypto data and analysis company, has released the results of a new model that predicts Bitcoin will surpass $60,000 in less than a year. The model is based on a stock to flow ratio, which compares the amount of commodity in circulation divided by the amount produced per year. The ratio is typically used to forecast the price of gold and was popularized in crypto circles by analysts Plan B. After crunching the numbers, Digital Asset Research says its results are close to those attained by Plan B, indicating BTC could hit $60,592 in May of 2020 before soaring well above $500,000 in 2024. They reported, "Our findings are broadly supportive of the original analysis. The SF ratio has had explanatory powers and is sufficient statistical significance. The model predicts a Bitcoin price of $60,592 in May 2020, followed by $732,256 in the 2024 halving. The study notes that it could take longer for BTC to cross 60,000 based on the leading crypto's prior price action. Bitcoin bull runs have typically continued to climb after BTC halvings, which cut the reward miners earn for powering the network in half every 4 years. And as you know, the next big Bitcoin halving is May of 2020. While the model predicts $60,595 in May 2020, in the two previous halvings, the actual price didn't reach 100% of the model price until well after the halving. Based on an estimating halving date 5/17/20, it was May 17th, that puts model parity sometime in the year 2021 based on a similar lag. In other words, we're still a ways off from knowing if these predictions will hold. Digital Asset Research says that ultimately time will tell if the stock to flow ratio will emerge as a leading indicator for predicting the future price of BTC. Our reading of the critiques combined our own analysis informs our belief that Plan B's original research was correct, but perhaps incomplete. Looking at declining premiums to model and rhyming cyclically lead us to believe that some other term of function is perhaps missing or undiscovered, or it may simply be the case that Bitcoin as an asset can never be valued, merely priced. In the words of Professor Aswath Damodaran, it does seem that pushing the model extreme boundaries produces some unbelievable outcomes, but we're unlikely to be around to see what happens in the year 2140. That fact we're fairly certain of. Nevertheless, we find Plan B's original findings and subsequent model an interesting addition to the discerning crypto investors toolkit. We look forward to further critiques and updates to the model and believe that open discussions can push our understanding of this asset forward. We look forward to testing the model with an out sample test at the next Bitcoin halving in May of 2020. Until then, stay on target. So what are your thoughts? Do you think the Bitcoin price will hit 60,000 in May of 2020 at the time of the next halving, which is right around the corner? And do you think it's possible for Bitcoin in the following halving in 2024 to be at $732,000 in value? Let me know in the comments down below. I'm looking forward to reading your answers. In other news, Anthony Pompliano says Bitcoin will be in every institutional investor's portfolio. In an interview with CNBC on August 20th, Pompliano said that every single week, more infrastructure is being built around Bitcoin and the crypto markets more broadly. We're at a tipping point. In making the case for Bitcoin's bullish prospects, Pompliano highlighted recent developments such as the coin's serial record-breaking hash rate this summer, which points to continual improvements in the network's security and support. He also took stock of regulators' recent approval of the much-anticipated platform for physically settled Bitcoin futures from the New York Stock Exchange operator Intercontinental Exchange. In light of all this, Pompliano argued, the more infrastructure that builds around this, the more likely it is to never go away. We're at a tipping point now where Bitcoin is here to stay. It's going to end up being in every institutional investor's portfolio, period. Pompliano recently predicted that Bitcoin will hit $100,000 by the end of 2021 when CNBC host Joe Kernan challenged the investor on his bullish outlook. Pompliano identified several factors that could, in the short term, temporarily suppress the asset's price. These include overweening regulation, which he acknowledged could initially scare investors away. Second, notwithstanding the health of the network's fundamentals, the number of the people who own Bitcoin still represent a very small percentage of the global population, with many yet to understand what it is or how it works. Pompliano further noted that the asset remains relatively tricky to buy and that its friction must be overcome for the coin to fulfill its true potential. As reported at the time, Pompliano's $100,000 prediction was based on his anticipation of the impact of Bitcoin's halving, when mining rewards will be reduced by half, thus increasing scarcity in May 2020. He also cited the growing legitimization of the crypto space, inflows of institutional capital, record trading volumes, and a climate of global instability that promotes recognition of Bitcoin as a safe haven asset. Pompliano also recently said he does not consider investing 50% of his wealth in Bitcoin to be an excessively risky move. So what are your thoughts? Do you think Bitcoin has the potential to hit $100,000 by the time of the next halving in 2020? Let me know in the comments down below. And in other news, we have people like Peter Schiff who say the Bitcoin price will never hit $50,000. This is what he told Tom Lee. In a social media debate on August 20th, Schiff, who is well known for his dislike of Bitcoin, pretty apparent, right? He's the gold guy. Said that gold will definitely reach 5,000 in the future. Schiff was debating with Joe Kernan, the CNBC host who recently interviewed Bitcoin proponent and regular Schiff troll Anthony Pompliano. Prior to the 2008 financial crisis, when I was still invited on CNBC, Joe was critical of my advice to buy gold. Joe was wrong to be bearish on gold then. He's wrong to be bullish on Bitcoin now, Schiff wrote. Kernan subsequently reminded Schiff about his $5,000 gold prediction, which has yet to come true. And Tom Lee, the co-founder of Fundstrat Global Advisors and another CNBC regular, chimed in describing the gold prediction as hysterical. So what are your thoughts? Do you think gold will hit 5,000 and Bitcoin will never hit $50,000? I don't believe that. I believe that he promotes gold because that's his business model, and he's tapping into the crypto niche market because that's his best market to be tapping into. All right, now let's talk about the Bitcoin dominance really being above 90%, which new research suggests. Bitcoin's true share of the total market cap for all cryptocurrencies may actually be above 90%, Forbes reported on August 22nd. While mainstream crypto aggregators have been pointing to the dominance level of above 70%, analysts at Accrane Research believe the real level may be much higher. Liquidity must be taken into account. Accrane Research has argued that to get more accurate measure of Bitcoin's dominance, liquidity should be factored into the equation. They write, one might be able to sell one token for $3, but what happens if you want to sell 1 million? Without accounting for liquidity, market cap becomes a meaningless measure. Using trading volume as a simple indicator of liquidity with the concession that a sophisticated measure could be constructed for more granular results, Accrane Research recalculated the volume-weighted market cap of the crypto market. Its findings point to a new figure of more than 90% for Bitcoin, 20% higher than other estimates. Now, if this is accurate, this is massive news. The researchers conducted two parallel analyses, one based on the data from CoinMarketCap and one confined to the 10 cryptocurrency exchanges identified by Bitwise Asset Management as having reliable volume that hasn't been wash traded or manipulated. Arcane Research notably excluded stablecoins from the equation, arguing that such asset peg currencies do not compete with coins that have self-sustained intrinsic value. So what does that mean for the altcoins? Well, the researchers claim that such an eye-popping level of market dominance makes it less and less likely that other cryptocurrencies can compete with Bitcoin. Network effects, they write, are all the more decisive when it comes to money, where liquidity is everything. Such robust dominance has implications for investors and those developing infrastructure for payments, as well as for projects that rely on the underlying security of a public blockchain. This notwithstanding, the study does include the caveat that it is notoriously difficult to compare and contrast different projects targeting different niches. For crypto, one can argue that the whole idea of measuring the relative strength of different coins and tokens falsely implies a competition between complementary solutions. And as reported earlier this month, outspoken Bitcoin advocate and former Wall Street trader Max Keiser recently commented on Bitcoin's surging dominant levels, arguing that the 2014-2017 era of alts and hard forks is dead. Bitcoin's current dominance as measured by CoinMarketCap is nearly 70%, a level not seen since April 2017. So let me know what you think in the comments down below. Do you think the 70% Bitcoin dominance as reported by CoinMarketCap is most accurate, or do you think that may be misleading as this article suggests, and that we may really be at above 90% right now, not counting the stable coins? Let me know in the comments down below. All right, now let's take a quick look at CoinMarketCap. As you can see, Bitcoin currently being traded at $10,188 at the time of this video, up 1% from yesterday. Ethereum is in the green. It's good to see it back at close to $200. We'll see if it continues to climb back up. It's currently trading at $192, up 2% for the day. BNB coin is down just over 0.5%, trading at 26 bucks. EOS is up 2.73%, trading at $3.68. Miss Litecoin is down. The original fork of Bitcoin, the silver to Bitcoin's gold. Litecoin currently being traded at $73.25, down 0.77% for the day. We see XLM in the green, ADA in the green, Dash in the green, Monero in the green. So overall, the market is in the green. Well, that concludes today's show. I appreciate you tuning in. Don't forget to smash that subscribe button and click the bell icon to receive notifications of the latest crypto news as soon as it's released. Also, don't forget to check out the description right below this video. Inside, I've included some incredible resources for you to tap into to take your crypto game to the next level, including access to my private crypto Facebook group with about 20,000 members, as well as my private Telegram chat where we can mastermind, discuss crypto and whatever's going on in the market, as well as some other incredible resources. So be sure to check out the description below the video, and I look forward to seeing you on tomorrow's episode. Peace.